Hi everyone, this is Claire and today I'll be covering Faber Residences. So by the time this video launches, it may be a little post-launch period already, but it's okay. I think what you want to understand here is also the layout types, the facing and all that affects investment value overall. So what I'm kind of shifting the project analysis to is while we will do the site plan and the location map and all that, we will also cover some of the theories that I think is important coming into a project today. So whether you're looking at Faber Residences or in future next year's launches and all, I hope that these theories that I share will be able to benefit you and also help you along the way. So for example, if you look at the content today, I will be covering the location, fact sheet, unit mix, site plan, but we also want to understand some of the key concerns coming to Faber which will effectively apply for your next couple of launches that you might be looking out for. At the same time, today's market is new versus resale. Is new still the safer buy to go for? Considering a couple of factors, right? One, the interest rates are dropping. Two, rental rates are kind of dropping as well. We don't see much stronger demand. So how does that affect in terms of looking at investment point of view? Should I still go for new where I do not have any much outlay with regards to property tax or maintenance and all that, or should I go for a resale property today, just purely looking at all the different expenses that you might have holding a resale property, right? So these are the things I want to cover, which hopefully will help you in the next new launch, or whether you're looking at property investment overall, what you should be looking out at. I hope that this will help you. But of course, I will also go through the unit type, the floor plans, what I noticed about the floor plans, and also a summary of what you should look out for each bedroom type, so you understand a little bit better about overall investment as well. At the same time, I will also be covering something that I covered in Penreef, where we talk about what are the important and key attributes that you need to have when coming to buying a new development, and what will determine basically 4 years down the road, 7 years down the road, when you want to sell the property, what kind of profit can you potentially get out of it. So let's get started. This is the location of Faber Residences. What you are seeing here is this empty plot of land that was GLS 1.5 years back. What you do get is actually a very quiet enclave where the Faber side of things are mostly landed properties, and if there are condos, there's only one at Faber Crest and the other one at Waterfront at Faber. So both are also 1 km within Nanhua Primary, so I think that's one of the main draws of why people are looking at this area as well. But later I'll cover a little bit on the key attributes part. So Faber Residences, what they have already kind of announced is that it's going to be about 10-minute walk to the next upcoming Jurong region line, which it's Jurong Town Hall, so exactly 1 stop away from Jurong East. So for 10-minute walking distance, not too bad when we talk about having a good connectivity to the rest of the region, right? I think this is not too bad a location. At the same time, they also have the 1 km from Nanhua Primary, but other than that, all the other schools are not so near, 1 to 2 km away. But the main draw of people coming in for example, Faber Crest, right? It's mostly for Nanhua Primary because there's also a walkway that leads you to Nanhua Primary easy. Okay, so now we come to the site plan. This is going to be 399 units in total of a land size of about 25,000 square meters. Later we'll compare a little bit of Waterfront at Faber and then we can get a good difference over here. But why at this kind of piece of land they need to build so many blocks, right? It's because of the plot ratio and the maximum height that they can build. So when the maximum height that they can build is only so short, they need to kind of spread it out. And that's why one of the main kind of key concerns that people are looking at is also that the block-to-block distance is quite close. It's a bit similar to what you get in EC. So for Faber Residences is about 23 meters for most of the blocks. So 23 meters, you can easily see your neighbor what they're doing inside and all that. So spotting the right layout is one, but spotting the right facing that will give you a little bit more resale value in the future when the next buyer comes in and physically standing in the unit, that will make a difference to the amount of profits that you get. Okay, so that's something to take note of. We also see that primarily most of the units are 3-bedroom and 4-bedroom. I think what we want to acknowledge here is also that coming to Faber, you are really buying this for own stay, not so much for investment. But at the same time, you know, for 3 bedrooms, there will be demand coming in for 3 bedrooms to be able to rent the unit as well. In terms of rental yield, later we will talk a little bit more about it, but I think even for the 3 bedrooms you're buying for investment and you want something affordable quantum, for you to be able to rent it out, I think it's not much of an issue because there are schools. When your Buona Vista area does give you some rental demand, and especially where there are also schools around, these lecturers, these professors, sometimes they do bring their families over and they would minimally need the 3-bedroom over here. Distribution chart. Okay, so what I want to notice here is also that there will be smaller 3-bedrooms and also slightly bigger 3-bedrooms, but because of how the site plan and how it's designed with a lot of blocks but spread out across the whole piece of land, there will be 3-bedroom units that are sandwiched in the middle. So what happens when it's sandwiched in the middle? You don't get windows in the toilets or you don't get windows in the kitchen. So that is something that we need to take note of coming in as a future buyer. Theoretically speaking, it's always better to have a 3-bedroom with kitchen with windows and then toilets with windows as well, because it's better ventilation. For future buyers coming in, they also like to look at these factors as well. For example, if you look at Claiborne, the compact 3-bedroom does have a window, so it gives off more light, ventilation, or is a little bit more acceptable for people, especially HDB upgraders coming in. So here's the site plan, right? It's distributed by like 3 strips over here. There will be some facing the park connector, and then there will be some units that you can hear the AYE noise. That's why for some of these stacks over here, they have put in acoustic ceilings so that they can cushion the noise a little bit. But essentially, if you want to come into Faber, this is most probably the last plot of land. And if you want to come into somewhere a bit more quiet, then I think this would be a good place to stay. So like I mentioned, the block-to-block distance are about 23 to 29 meters, some of them 29 meters. If you ask me, it's going to be very, very marginal. That means essentially at all these, even 29 meters, you will be able to see your neighbor. It wouldn't make much of a difference if you're 23 or 27. So coming in here, we want to ideally find the right price gap between the ones that are better facing and also the ones that are inner facing, because the inner facing one, you see that they will not be able to offer you much of a view, and also you are a bit close to the neighbors. If you look back at site plan again, when we want to look at a good development and we want to make sure that other people talk about it, but the quality and the make and the maintenance is good, we also want to see the developer, which I'll cover a little bit later. But if you just look at the site plan, actually there's only one site that has the pool. In terms of facilities, while they have a whole range of them listed down, these are all like just throughout zones that may not offer you that much of a value in terms of coming in to pay a particular maintenance for facilities like that. If you compare to, let's say, Normanton Park, right, the facilities are massive, Park Clementi's facilities are massive. There's a lot to offer, right? Sterling Residences also, there is a lap pool, tennis court and all that. But this one, because of the plot of land and the number of units that they want to build versus the number of stories that they can build, they have to build it like that. So in terms of the block-to-block distance is slightly shorter, they kind of need to squeeze out like that. If they can potentially build higher, what you will get is, you get one block here, you get one block here, right? Then the whole piece of land here can all be facilities, which will be a bit more welcoming. Like if you talk about Whistler Grand, Twinview, there are reasons why Whistler Grand and Twinview is still doing so well. It's because when you come in, you feel like, okay, this is something that I'm willing to pay maintenance for and I'm willing to pay the price for it. Even though location-wise, I think quite similar because it's not got super walking distance to the MRT, but yet it's still quite well connected in that sense. So there's a couple things to note. This will be the indicative pricing. So they're starting from 1995 per square foot for the 2 and 3 bedrooms. Okay, so before that, when we look at the land bid price, actually in my previous video, I also shared the land bid price about 800 per square foot PPR, which translates to about 2,000 per square foot in my prediction. So this is roughly what we are seeing today. Low floor, that means your first or second floor will be likely looking at 1,900 per square foot. And then the high floor, because they only got 1 to 5, right? They cannot be loading so much PSF on top on the 5th floor. So the good thing here is that even if you're on the 5th floor, you won't be paying that much. Okay, that's a pro of it. But if you look at the cons of it, actually there is a little downside to it, because if you look at Twinview and Whistler Grand, they are all high-rise. When it comes to high-rise developments, there is a proper floor loading when it comes to it, right? When we have that proper floor loading, it means also that the price can be a huge range. So today, if I'm entering something at level 7 and I want to be able to exit at somebody who bought at 35, I can potentially command it better because the 35th floor in that development has already transacted at this kind of pricing and it's already accepted in the development itself. So when that happens, it's easier for me to say, okay, I just want to get the 35th floor price, and there will be higher chance that you'll be able to get it, versus if you're on a 5 stories one, you see that in the resale market, actually not much difference. Your second floor may sell at the 5th floor price, your 5th floor price may sell at the 3rd floor price. So in terms of that range of PSF, which I'll cover a little bit later, it's a little bit more obvious for low-rise developments. So what are the key concerns coming into Faber, right? One is that the price gap is a small range, like what I just mentioned, a small range to a high-rise development. So Faber will only have some premier facing jumps where it's facing the river, it's quieter, right? Facing the landed properties is a little bit quieter, but the ones maybe facing where you have the noise of the AYE side, that will be slightly cheaper. But the inner facing one, actually I think they will be priced quite competitively if you're looking at something that's of a low entry price. But of course, if you're looking for own sale, I think going for the premium one will give you the lifestyle that you need, because coming into Faber, it's a little bit more quiet, it's a little bit more coming home to a like quiet enclave where it's not so densely populated. So aka your lowest pricing will be the average pricing for high-rise developments, which Later I'll cover an example between Daintree Residences and also Vista Grand just to do a comparison over here. A school, yes, there's a school but not near MRT. How does that affect your profits? Not all properties actually, as long as their school, make some money. If you look at Trilling Residences, they entered around 1,000, 3,004 and it hovered around 1,000, 3,000 for quite a while until COVID hit and then it went up. More than the pricing itself, I think Trilling has a problem with their layouts. I think some of their layouts are not that efficient. We had the loft concept ones for the 4 bedrooms, which is not so usable space on paper because they count the loft area as well. So some of these things that will affect your pricing, which I'll cover later at one part where I talk about the key attributes to making a good development and how you can actually make use of that, whether you're looking at Faber or whether you're looking at other developments, how you can make use of this theory to help you be able to understand and also decide better on your next purchase coming forward. Is Faber the best product out there, and what are the key attributes to a good development that will secure the profits that you want 4 years to 8 years down the road? Is something that I will cover a bit later, where I pull out some examples of how attributes like that will be able to help you make the profit that you want from an investment point of view. So we talk about price gap between high-rise and low-rise. Like I mentioned, there is a smaller gap between the low-rise developments and a higher gap between high-rise developments because every floor level there is a loading, right? When you talk about Vista Grand or Twin View, you see that the loading is actually quite significant, which I'll show you here. So let's say Daintree Residences, right? When we talk about the 1055 square feet, their second floor is around 1.68 million that was transacted in 2020, same period of time, just 1 month difference. The highest floor was about 1.8. So from this floor to this floor, actually the difference is only 120k, thereabouts, okay? And we compare with Vista Grand, exact same stack, from the low floor all the way to the highest floor, actually you see the difference is quite significant. So they're coming in 1.59 to 1.89, so this is almost a 300k difference. And that's where I can say that today I enter a 4 bedroom here at 1.6, which actually sounds very ridiculously cheap today. At 1.6 I enter a 4 bedroom, but can I say that I want to command the price over here and be able to exit at this kind of pricing? Actually yes, because the development has already transacted at this kind of per square foot. So for me to command that kind of per square foot is quite reasonable in that sense, okay? So the theory here is that if I come into a higher development and I enter at lower floor and I can roughly secure a profit, because on paper I would be able to see that 300k profit already instead of looking at a lower rise development. So I think the downside of Faber Residences or the downside of Waterfront at Faber, it's mainly this, because the pricing is to be able to be significant enough for it to move upwards so that you eventually get the profits that you want and you maximize it. So in this case, in short, I would say before I start the floor plan analysis, I would say that Faber Residences, you're looking at more of a long-term game. Maybe you're coming in to buy a 3-bedroom for own stay just for your child to get into the school. I think that's fine. But coming in at 2,000 per square foot, you need to understand that actually this one will take a while for you to move upwards and it wouldn't be that quick, right? Because like I mentioned again, the key attributes are important. So later we will lay out for Faber Residences what are the key attributes, and then you can kind of determine like, actually is this going to be the best for you so far. But if you're really buying for stay, actually there are not many developments in the 1 km within Nanhua, so that might be one of the considerations. And I think for your child, it's more important than the investment product itself. So if you look at Daintree Residences, the low floor here and the high floor is only about 15 to 17% difference, but for Vista Grand it's 30 to 35%. So like I mentioned, the PSF difference is more significant for a higher rise development versus a lower rise development. So in terms of price movements upwards and the number of transactions upwards, this one will definitely be able to gain a little bit more. Then we look at the profits made, right? So for example, if you look at the first two examples, so this is a 3-bedroom at Daintree Residences, exactly the same size, okay? You see the profit difference can be so much. And at the same time, the annualized profit over here is hovering around on average about 2 to 3%. But we're still going to see that consistently they have done 4 to 5% or some even 7% over here for a 4-bedroom. Yeah, because of the rarity as well. But you see that actually Vista Grand is a little bit more consistent, and the per square foot coming in here is a little bit more consistent as well. So definitely the lower floor ones will get to gain a little bit more because the entry price is lower and they can command the amount of per square foot over here. I think it's relatively quite a good deal. So in short, if we compare a low-rise development versus a high-rise development, generally a high-rise development, because the highest per square foot done and that development will already hit a certain amount, anything that you buy below will be a good cushion against it. But if you buy today at Faber Residences, where the PSF difference from the first floor to the 5th floor is very insignificant, then in terms of cushion, it's not really there. That's why I say for Faber Residences, it's mainly more for a long-term play. So you don't really think too much about exiting in 4 years. I think that might not be such a good idea. But if you're looking at something of a 8-year time frame, generally the price will still go up. And of course, I'll cover a little bit on the key attributes in a bit so that you can understand a little bit better on whether Faber is going to be the right one for you. So I'll just do a quick floor plan analysis on this, because in short, for 2 bedrooms, right, there are going to be 3 different layouts, but they're all 6 for 6 square feet. Very marginal difference in terms of like the bedroom over here is pushed outwards. There's a little bit more distance over here. A little bit very marginal difference, but overall, all what you can say for Guaco layouts are actually quite trustable. You see in the rental projects, they are actually quite well done. So in terms of layout, I don't think we worry too much about it. But here coming in, you get a 2-bed, 2-bath, but you get a very wide frontage over here in terms of the corridor space. So it does feel a bit more welcoming with an open concept kitchen. 2-bed, 2-bath, dumbbell concept, and 1 balcony. And they are all situated in the middle of the blocks because no windows on this side. They cannot give you windows on that side. So most of them are in the internal facing ones, okay? And there are also external facing ones, but of course the price point, I think looking at this particular stacks facing inside, they will be starting from 1.3. So if you think about 1.3, 2-bed, 2-bath, actually cannot really find the market. So if you want to look for something brand new, and the fact that there are only 80 units in total here for Faber Residences, the newest one in the development, I think price point wise is still acceptable, because if you look at, for example, Sky at Holland, right, the 2-bed, 1-bath is starting from 1.5 something. So there is a price gap, but of course, looking at a longer term investment, if you want to stay for a while or rent it out for a while, I think still okay. But if you compare for other prices in Clementi for 2-bed, 2-bath, right, so what we are seeing today is the 2-bed, 2-bath will be starting from 1.39, let's say 1.3. But you see that actually Park Clementi's in the resale market, 2-bed, 2-bath has already transacted at 1.53, Clermont 1.55 to 1.56. All the new developments over here, they are actually quite high as well. They're up to 1.9 something. So coming in at 1.3, I think actually can, because the cushion is there, but of course, because the development is a little bit far in as compared to Park Clementi's, Clermont, Lindenwoods, which has MRT, Alta, which is a little bit walking distance to MRT, this will be less of a choice for people in terms of 2-bedroom. But if they're looking at affordability and want something brand new, then Faber is a good in-between to look at. So what we have now here at Faber is that we have an 800 per square foot PPR, and they're launching at about 2,000 per square foot. The land bid prices here that you see today is actually not going to be very possible for future bids that are coming up, in whether it's on GLS or on block cases anymore, because you see that the land bid prices for even Far East properties, which is at Bayshore MRT, is already bidding at this kind of pricing. Daniel Road, Chuan Grove, all in the OCR region, belonging to the OCR region, has already hit 1,003. So actually Faber coming in at 800 is considered very, very cheap. Why am I sharing this slide with you is because we do see the upcoming bids do signal even higher prices this year. So as I'm speaking, actually we are looking at the Sky at Holland launch, right? There are actually 2,000 over checks for 666 units, and they're selling out quite fast right now, because in terms of price point at 2007, 2008 per square foot in D10 near MRT with amenities, actually very, very hard to find. So coming in, looking at this period for launches in 2026, actually we do see that there will be higher prices next year. But with the shift in interest rates, more cuts coming up, it may be more worth it for you to go for a new resale development coming to next year. But of course, we need to understand a little bit on the gap so that we can assess it a bit further. So if you are just looking around in the market, you may not be able to take action today, or your MOP is probably next year, or SSD is coming next year. You cannot take action today, but you can take action next year. I think it's important for you to understand the dynamics of where the prices are going before you enter into a new launch, because right now what we're seeing is new launch demand is very high. So when new demand is very high, people think that, oh yeah, it's worth it, there's a hype over it, if I get a good Q number I should go for it. But understanding the price point and where you enter would definitely make a difference in terms of looking at your profit 4 years down the road. Because yes, there are launches that are sold out of 95%, 88%, but when it comes to the resale front, there are some that I can identify today that may not be able to make as much profit, or maybe even harder to resale in the resale market, because there is basically nobody looking at it. And so I'll cover a bit of key attributes in just a little while, but just understanding the prices will help you gain a better understanding of where you're going next year and what will be the best choice for you from an investment point of view next year. So when we talk about new or resale, right, this is something that I've always kind of shared with my clients as well. When we look at a property that is new here and resale, what we are seeing is for the same quantum, 2.5 million, we project a property price growth for new property to be a bit higher, because generally the demand for new properties, depending on product, will always be higher than resale, because resale you have to take into account fluctuations. If somebody sells low, you will have to bite the bullet a little bit and wait for it to come back up before you can potentially sell at that kind of pricing. So we project a shorter growth for resale properties, but because resale properties, if you're buying for investment, you can potentially rent it out, right? So for 2.5 million, maybe a budget in the RCR region, you can get about $5,000 in terms of rental for that. And in terms of gross profit, actually is very comparable. But what we are seeing is actually for today's interest rates at 1.55%, which is already going down, plus your expenses of monthly maintenance, your non-owner occupied tax, which has gone up already, your income tax, your minor renovations, your agent fees and all that, actually the cost of owning a property in the resale fund is actually quite high. On the other hand, when you buy a BUC property, you don't have to pay any maintenance and any property tax throughout the period of time until you get your keys. So what you are paying is only 4 years of bank interest, which is done on a floating rate, and even today the floating rate has gone down to 1.56%. So generally, if you're talking about net profit, your potential growth that you get versus the expenses that you have to pay out, even though you're renting the property, the net profit is actually higher for BUC property. But coming to next year, I think where the prices are higher, in terms of the projection of the profits over on this side at 5%, may be a little bit lower, we don't know. But with the interest rate dropping, there will be some shift in the math over here to the point where maybe it might make sense for you to go for a resale property. But that becomes a little bit more crucial for you, because when it comes to resale property, you need to be able to choose the right one and understand that it's considered quite undervalued so that you can see the profits once we hit the next jump again. So for new properties today, I think right now, especially for this year, it still makes sense to go for it because of all the costs over here. But when the things shift, right, when prices for new properties go up and when resale interest rates goes down for fixed rates, we might see that shift and we might be able to say that, okay, maybe actually resale properties might make a little bit more sense. But of course, it really still depends on the product that you buy, and you want to understand that layout and that project is going to be sought after when you want to exit in the future. Okay, now we come to the 3 bedrooms. So the 3 bedrooms have quite a number of layouts, so bear with me a little. If you look at Guaco projects overall, you look at the floor plans for Lentor Mansion, Faber Residences, actually they are pretty standard. In this case, because this is the compact 3 bedroom, they have no windows at all because they are situated in the middle of the block. So no choice, they got to plan out the site plan this way to be able to squeeze in about 400 units. If not, in terms of the profit margin, the developers might be getting, it will be a bit tight. So they will have to do something like that where the middle stacks that do not have windows as well. I don't have the measurements for this yet, but generally I think this will be about 3-meter living dining area. In terms of coming in entry level, 1.6 million. Something that is also very hard to find. 1.6 million is your 2-bedroom RCR pricing today. So coming in 3-bedroom here, if you're really okay to just own stay for a little while, I think this one is okay, but I do have a more preferred layout. So this is the 818 square feet. Same as Zion Grand Residences, the 818 square feet 3-bedroom has an open concept kitchen. Okay, but this kind of gives a bit more space for a living dining area if you do like it. Some people might like it, they can even enclose it over here, but it may block a little bit of the entrance space. But if you do want to enclose it, the good thing is they have a kitchen. They have a window over here, window here, so it's situated at the side over here. So I would think this one for an entry level 3-bedroom, it does make more sense. Then we come to the 861 square feet. Also no window, but they come with a flex room. So in this case, this wall actually can be hacked. You can actually open this up and make a very big dining area where you can host if you like to host. Then it gives you the flexibility to enclose the whole kitchen like that. So I think this layout is not too bad, but they don't have the window. So in terms of the layouts that they give you, actually they kind of balance it out, right? One is they give you a good layout but no window, or they give you a not so good layout but got window. So you kind of need to be able to balance that and decide based on the pricing what you should go for. But of course, if you're in a queue and there's so many options to choose from, right, it's a little bit hard for you to make a decision. So being very clear before you go into the queue is important as well, so that you can know that actually for so many stacks, you are very clear on exactly which layout you want to go for and at which point you move to another stack, and at which point do you see the pricing difference before you decide what to go for. There's a bigger 3-bedroom. This one comes with a dry kitchen concept and a wet kitchen concept and a home shelter. So I think this one will be quite sought after if I want to have also a flex room. But in terms of quantum, of course, it'll be a bit higher. But if you can get something in the 1.9 range for this kind of size, I think it's really quite undervalued, and people will be quite drawn to this kind of layout because even the flex room has a full flex window. Home shelter for storage. For HB upgraders, they will probably like some storage as well. They may not have a helper, which is fine. I think this layout will fit the people better, and all the bedrooms can fit queen size anyway. So my top choice, if you talk about entry level price, is really this one. So I think 1.7 something, 1.8 for you to buy something that is a full 3-bedroom with a proper kitchen, I think the 861 square feet will still win. But of course, it doesn't come with the windows, so you have to kind of balance that out between the three if you're looking at something that is below 2 million. If you have a little bit more budget and you want to buy something for own stay, I buffer at 2001 per square foot, you should be getting around 2.1 something, which I think if you talk about Alta and Claiborne and Lindenwoods, I think those are also higher already. So this would be the lowest entry price I would expect for in 2025 that you can get this kind of pricing going. So now we come to this particular topic where I talk about the key attributes to make a good development. I've covered this a little bit in the Penrith video as well, so bear with me. If you already watched the Penrith video and you want to understand a little bit better as well, or if you're new here in this channel today and you want to look forward to see when you want to enter the market next year, what should you be looking out for? So I think these are the 5 key main important points where we understand whether in future 4 years on the road, 8 years on the road, when you want to sell, would this be a good development? So we have being visible, we have good layout, decent land size, reputable development. In terms of the build quality, that means it will last for ages, and especially more importantly, the good entry price. So if we look at waterfront at Faber, right, their land size, they have 210 units. Their land size is around 15,000 square meters. So what we see at Faber Residences, where we're looking at today, is almost 4,100 units at 25k square meters. So proportionally, I think it's around there. Okay, but you see that actually the facilities are only all situated in the middle, and the block-to-block distance can be quite close. That means you can see into your neighbor. So in terms of land size, I wouldn't say it's the best, and in terms of the facilities, it's not like super welcoming like what you will compare with Momentum Park, Sterling Residences and Claiborne as well. Because you see, when you come to Claiborne, right, you see the 2 blocks that are side by side, a bit staggered side by side, but the facilities 4 are actually in a very big piece of land where they dedicate it closer to the expressway, all the facilities, which makes it one of the more attractive ones if you look at the whole Clementi belt. Even for block Clementis, I feel like because there's so many blocks and so many units, Claiborne is a good in-between in terms of the land, looking at land size and the number of unit mix. Okay, so when we look at waterfront and Faber, we want to compare all these key attributes, and at the same time, we also want to at the end compare the amount of profits that they have gotten so far and see actually how all these factors do affect the profits. Okay, so now we talk about land size. The land size is decent, but actually in terms of facilities, they're not exactly built very well, where you will feel like, okay, this is going to be super welcoming, I will enjoy staying in here, unless you prefer like really quiet spaces. In terms of layout, the second point, when we talk about layout, what they have is they have this high ceiling concept where there's stairs in one of the bedrooms where you have a loft concept that you can put a bed on top or study area on top, which makes it a little bit unusable and is counted into the square feet as well. Okay, so they also have bigger balconies. They also have balconies in the master bedroom for some of the 3 bedrooms. So in terms of layout, I wouldn't say it's the best, but it's okay. It's not the best, but the good thing is they have toilets, your squarish bedrooms, your proper kitchen, home shelter. I think those are not too bad, so I will give a tick this, and then this one I would say maybe somewhere in the middle. Waterfront and Faber does not have a good reputable development. We don't really know this developer as well, and it's something that maybe they just come in and try and head out. So in terms of the maintenance, I've heard also from my friends that Waterfront and Faber, the maintenance not so good. At the same time, Faber Crest, a bigger development just right beside, even older, right, actually the maintenance is not so bad, and their profits are actually not bad. So am I right to say that actually this reputable developer thing is quite important for your future buyers coming in? Because once you step in, your car park experience, your lift experience, your door experience and all that, the whole facade, the experience is important for you as a resale buyer coming in to want to buy that development. When the build quality is not so good, you can tell within the next 3 years after TOP. So this would definitely affect your profits as well, and that's also the reason why Waterfront and Faber is not lacking a little bit, but Faber Crest is actually still doing quite well because the maintenance of the property, even though it's old, is actually quite good. Then the last point is being visible. If you look at Claiborne versus Kent Ridge Hill Residences, of course, Kent Ridge Hill Residences in Pasir Panjang area, if you don't drive by the area every day or you don't live in the area, you wouldn't know about it. Even though it's sitting on a very big piece of land, the layouts are quite decent. The profits that you see there is actually pales in comparison with what you would see in Claiborne, because every time you drive by AYE, you see towering above you. But for Waterfront and Faber, you don't see it because it's kind of like hidden in the forest kind of feeling. And at the same time, Faber Residences will be something like that because only 5 stories high. There's only a couple of blocks that you might see that when you pass by AYE, but I think that's about it. So we covered land size, we covered layout, we covered reputable developer and being visible as well. But of course, you want to understand that coming into Faber Residences, if you're looking at it now for remaining units as well, you need to understand that actually the price is important. And of course, just theoretically speaking, the higher rise developments may be able to give you a little bit more profit for a shorter entry price, for a shorter time period, rather than looking at something that is low rise that means it takes some more time for you to run its costs. Okay, so we look at the profits made for Waterfront and Faber, for a holding period of 11 years over here, actually their profit is actually quite marginal, like 1 to 2% on an annualized basis. And for a 2-bedroom here, you only make about 200,000. So if you look at the time period of, let's say during COVID, I had gotten one of Eden, actually because of the entry price, even though it's a small development, it's not so known in terms of visibility, but because of the layout and also because of the entry price, the profits are actually about 300 plus 400 in over the course of the COVID period, over 3 to 4 years. So I think really understanding what are the key attributes that help you make a good development would definitely translate to what you see in the profits in future. So coming to Faber Residences, is it visible? I would say not really. Okay, I think the layouts are super good. It's going to be one of the better ones if you compare to Waterfront and Faber. So next time in the resale market, if you look at Waterfront and Faber, look at Faber, of almost the same distance to everywhere, people might be more likely to choose Faber. The land size, I think in terms of facilities, is almost comparable. You get a lap pool, you get some facilities on the side. I think nothing much to complain about if you're comparing these two. A reputable development, definitely if you look at Waterfront and Faber, the facade, and you look at Guaco, I think I have more confidence that Guaco lands facilities will be much better than Waterfront and Faber. So if you are Waterfront and Faber owner today, maybe it's a chance for you to let go before the TOP, because I think more eyes will be drawn to that naturally for Faber Residences in the future. And of course, good entry price. So I would say good entry price, you're coming in at 2,000 per square foot for that kind of location is going to be one of the cheaper ones in the D5 area, but at the same time, I think in terms of the time frame, we should be looking at least 5 to 7 years, conservatively 7 years, to be able to exit with some profit made. But of course, if today you're buying for school, I think you should just go ahead and do it. Get the layout that fits you the best, and then the profits will be a little bit more secondary. But of course, I would say that because of all these attributes, the project won't do so badly, but it needs time for people to kind of understand that place and also coming to want to enter. Okay, so now I come to the 4 bedrooms. You have the 1119. Okay, this one comes with a store in the front here, a little foyer space. You got a bath at the side. It's more like a powder room for people and maybe more of a maids area. A wet kitchen with windows. Bedrooms all can fit nicely a queen size bed. This one doesn't come with wardrobe if I'm not wrong. And then a proper living dining area in a portrait mode. So I think for this kind of price point, this is actually your 3 bedrooms in the RCR region already. So coming in here, or even Alta right now, the 3 bedrooms compact at 936 square feet. The higher floor ones are already asking 2.8 million. So in terms of price point, I feel generally it's still okay to enter, but you need people to know about it to be able to want to come inside here, or they really just purely buying for school. In today's market, I feel that actually not a lot of people are really eyeing for the school anymore. It's a good to have, but it's not a must have. But of course, because we are so a little bit more well-versed with the property market today, we kind of are knowledgeable to some extent the amount of profits that we get, especially in today's market where it's a little bit more higher barrier to entry. It's important to know that whatever you're buying to, 2.5 million, 3 million, 3.2 million is going to be worth your investment. So this is something to just think about when you are looking at Faber or looking at the other properties around the area. So another 4 bedroom is at 1206 square feet. Okay, so this one comes with a little bit wider area where there's no private lift, but there comes with a walk-in wardrobe. There is a dry kitchen, wet kitchen. I think for hosting, you can even put your dining area here. It's a little more welcoming. At the same time, you also have interestingly, the store and WC is here, so actually you can use this whole thing and double up as a washer dryer area, and then hang your clothes here maybe. Then the bedroom is tucked on the side. The only complaint that I have here is that there are no windows in everywhere. So the bath here doesn't have, the kitchen doesn't have, the 2 bathrooms also don't have. So for 4 bedrooms to have no windows, but this layout, if you can choose the previous one, I think no harm choosing the previous one. The other good thing is that actually you can hack this down and make this a landscape living dining area. This can serve as your like a little study nook if you want to, for additional room space for study. Then there's a 1216 4 bedroom. You also can hack down the bedroom here to make it a bigger living dining area. Also no windows, but the kitchen is slightly bigger. The bath area, I think, is slightly downwards this side. That means you got a little bit more distance over here. I think that's the main difference. Then there's a 1270, which I think is the best. You get the dry kitchen, wet kitchen. Okay, you get bathrooms here with windows. Okay, you also can hack this down and make this a landscape living dining area, and the bath is tucked on this side. Yeah, so I think this layout would be the best. Coming at 4 bedroom here, in terms of this quantum, I would think if really just purely for investment and not for own stay, then there are other better options out there for you to be able to enter at the 2.6, 2.7 million range instead of this for investment. Okay, lastly, we come to the 5 bedrooms. This is 1485 square feet and it's going to be starting from 3.19 million onwards. So 3.19 million, actually you can get a 3 bedroom or even a 4 bedroom elsewhere that may be able to give you a better return, because for 5 bedrooms here, I think when people are coming in the Clementi area to look for a little bit more luxury product, unless they are really looking for super quiet area, they may not be looking at 5 bedroom over here. But of course the layout, I think in terms of not much complaints about it. There is windows for you in the bathrooms and all that, but this layout and this pricing, I think there are better options out there. So in summary, I would say this Faber Residences is more of looking at a longer term outlook, where let's say if I break it down, one for 2 bedrooms, you're looking at more of a quantum play. You cannot find a 2 bed 2 bath at 1.3 something mil, 1.4 mil. For 3 bedrooms, you may be able to get it something of a good entry price just for investment, and for you to be able to rent it out, I think not impossible. But if you're buying for investment, buy something smaller. But if you're buying for own stay, buy something that fits your needs and maybe for school at one period of time. And then after that, look at where you are with the profits and all that before you decide to exit. For 4 bedroom, same thing, buy what it fits your needs. Of course, there are, like I mentioned just now, there are some layouts that are better in general, but then don't give you window, or like a lousier layout but give you window kind of thing. So they kind of really balance it out. Price movement definitely may be a bit slower, but I would think there will still be profit because everyone else would be transacting at way higher, 2007 per square foot, 2008 per square foot. But here, maybe you can be able to exit 2004, 2005 safely, but it will still take a while. Okay, so you don't really expect to be able to sell it upon TOP for 4 bedroom, 5 bedrooms. So here's my contact number if you are looking to purchase something in 2025 or rather 2026. I hope the theories that I've just shared will be able to help you make the decision clearly. If you're still unsure or you want to understand a little bit more about how to be able to choose the right unit, especially when you're in the queue, you can also scan this QR code and WhatsApp me directly, and then we can chat then. Thank you. See you again. Bye.